Welcome in, everyone, to the Real Estate Investing Show. I'm Clayton Morris. This show is dedicated to helping you become a more intelligent real estate investor. And on today's show, we've got a special guest who built his first six-figure business in his 20s. I was $75,000 in debt in my 20s. I was basically living on a couch. So I want to hear all about how he was able to do that. Now, 20 years later, he's built an 8-figure empire and has mentored people from around the world in sales, real estate, business. His trainings are highly in demand, and we are thrilled to have Jerome Maldonado on the show today to share his wisdom, his insights with our audience. Jerome, welcome to the show, my friend.
Clayton, thanks for having me. Really appreciate you.
Absolutely. Great to have you. And, I want to pick your brain about a lot of different topics today, like real estate, once we get through this pandemic lifting, understanding also why you would buy up failing stores, like you buy up Pier 1 import stores and Radio Shacks and Modell's Sporting Goods, et cetera, and so much more. So I want to get to all of that on the show. But I guess a good place to start is give us a little backstory on your journey into real estate investing. Why did you decide that that was a place that you wanted to devote your time, attention, and energy when you first started?
I didn't even know that I was going to get into real estate when I first began. In all honesty, when I first got started in business, I rode the roller coaster. So just like you in my early 20s, I was battling financial distress, was over $100,000 in debt. And I was in my young 20s, drove myself there from trying to make a network and direct sales marketing company, function and flourish, and traveled all over the country trying to make things work. And so after about 2.5 years, I finally figured out the business, and I started doing well. I was making about 10 grand a month. Drove that up to about 20,000 a month. I was doing really well by the age of 23. And it all fell apart. The FTC came in 1997. They pulled the rug out from underneath us, and we were back down at zero.
Wow, what
happened? It
took
me about a year to get back on my feet.
What did the FTC come in? What was their concern? What do they say?
I was with a company who was doing environmental health and nutrition products. We were front loading people with products. You take a look at companies like Melaleuca, Amway, where they're more grocery store based, where people, when they go in and they purchase one product at a time, replace their shampoo, their toothpaste, their personal use products that they're utilizing every single day, they're spending $100 worth of product. We were pushing out $5,000 orders, $2,000 orders, and front loading people with products. And the FTC in 1996, 97, 98, they started coming in and regulating direct sales and network marketing companies. And so we were one that were affected by it. We got a lot of publicity because we were the fastest growing privately held company in American history at that time. They published us on Inc. 500. And a few months later, we were on 2020. Barbara Walters was hashing at the company, and we got a lot of a lot of attention from the FTC.
So how do you bounce back from that? That's
so it was a year of challenges for sure, and I think that's what most people don't realize. I think a lot of people that are successful, they go through this roller coaster ride, and we learn a lot about life and business, with the exception of those very few people that just hit something and go with it. We thought that we'd be at a place today that we were done, retired. And I'll tell you that God had a different plan for us. And so in 1998, I landed up back in Albuquerque, finishing up my education. And I was back. I had 3 semesters left of college, came back, met my wife. And in the interim time, I got into construction. I had a brother-in-law that was his boss had went out of business for tax evasion. I went in to go get my contractor's license with him just to help him. And then he didn't show up the day we went to go take our exam. I did. And so I started bidding projects. I knew how to sell. So I started selling construction projects. And at that point in time in my life, I felt like I had nothing to lose and everything to gain. And so I just went in and started bidding stuff really aggressively. And one of the first contracts we landed was this bank coming into New Mexico. And it was a big win. So we landed up turning 7 figures our first year in business in 1998 going into 1999. And I told myself I was never going to put myself in a position where I would allow myself to kill a business and then not have anything to show for it. So I started buying a house with a rental, and I started investing in the second house. And then it kind of unfolded from there into commercial real estate and retail and so forth.
When you talk about retail, one of the things I mentioned at the beginning was you buy up businesses like Radio Shack. I mean, growing up as a kid, I would go to Radio Shack with my dad, buy a Tandy computer and go in there and look at the robots. And then as over the past few years, I can't imagine going to a Radio Shack. Like now things have changed, right? You go to a Best Buy or a Pier 1 Imports. I don't know what happened there. Maybe like Wicker is not so popular anymore. I don't know what's going on. But now you swoop in and buy up some of these retail spaces that are on a downward trajectory. Take me through the thought process there. For a lot of us, we'd be scared to do that.
I can't take credit for all that stuff, Clayton. I'll tell you, the one that really had the foresight on this was Ty Lopez. He started talking about buying these distressed brands, and one of his biggest mentors is Warren Buffett. And one of the big things that Warren Buffett said is buy big brands, and you don't need to buy a ton of them. You just buy a few good brands and make a small percentage on them. And at the time, Dr. Alex Minter had just sold his company Zeus for over $300 million. He had done everything online. And I was just positioned with these guys at the right place at the right time. So I was fortunate enough to be an equity partner and being able to give capital to being able to deploy into these and seeing the foresight. And the whole thing behind it was thinking about how long it would take to get the world recognition of like a Pier 1 Imports. When you go in to ask people over 30 years old, have you ever heard of Pier 1 Imports? Over 95% of people are going to tell you yes. You think about Radio Shack, and Radio Shack being a worldwide company, being as large as it was, again, people over 30 years old has over a 90% recognition rate. And so you're building just a brand from nothing to be able to get a 100-year-old company and have that type of recognition rate worldwide is almost impossible for most people to do in a lifetime. So the whole thought behind it was buy these brands that already had the reputation and just revitalize them online, scrub all the debt, all the real estate, get rid of all the debt and stuff that's made it go bad, and relinquish all that in bankruptcy court, and then take these assets and reposition them online, take the intellectual properties and rebuild them from scratch.
Wow, brilliant. So now I'll know next time I'll have to go and pick up some cables and cords on a Radio Shack online. Go through that strategy. That's a brilliant move.
Yeah, you got it.
I mean, especially during COVID. I mean, and also it's like a 1-2 punch, right? Because now the ability to go into any of these stores, you're not walking through Pier 1 Imports casually looking at, furniture, to be able to just go online and order that end table right from the comfort of your own home. Yeah. No,
and one of the big things, it sped up the process 5 years for us. It was what COVID did. We were anticipating doing this type of stuff and taking down these type of acquisitions. In fact, we were talking about this 2 years ago, and we knew this was coming through the death of retail, right?
Right.
We just didn't realize it was going to get stimulated this aggressively. And so with anything in business, having the foresight to see trends in advance helps, but there's a little bit of luck involved. And so as bad as COVID is, what I keep telling people is where there's times of financial distress, there's opportunity. And what COVID did is it sped up the online process. So grandma and grandpa who weren't shopping online, a lot of the more mature folks who were still going into retail and are now pressed to go in and buy groceries and their clothing and stuff online. And so it just sped up the process of education of online shopping. And so we're literally about 5 years ahead of where we would have been without COVID. And so even though it's been so bad, it actually helps stimulate the direction of where we're going and the brands that we've invested in and taken down. So excited about that in that regards.
Fascinating. Well, you teach a lot of things. I want to put up your website here at jeromemaldonado.com. And just take me through, I mean, you got a whole bunch of different courses in what you teach. You have your nine-step blueprint that people can get for free by going to your website. And here's, again, the link. But we click on your courses here. Take me through, like, what are the things you're most passionate about teaching people when you first meet with a student who's interested in, taking their life to the next level? What do you hope to bring to someone for the first time?
Success in some small way. I think a lot of people, because of our educational system, they're in a position right now, especially even with COVID, where they're struggling, trying to decide what they're going to do next. And if we can take them and teach them how to invest in assets, take advantage of what the U.S. has put together as far as capitalism and tax benefits that the self-employed and the wealthy benefit from, and teach them how to take down an asset that they can utilize to grow and stabilize their future. More than anything, that's what I have the most passion with. And obviously, there's an ulterior motive behind anything. I know people go in saying, "Okay, why would you do this?" And one, it is great. It is a good feeling to help people succeed in any small or large way that you can. But single-handedly, we take these people, they start generating capital, and then they can start investing in some of our larger deals that we're working on. It helps our company grow as well. And so it lands up being a win-win situation. It allows us to go and take down larger acquisitions, have people that really advocate for us. And where I actually learned this from was Ty, because he did it through all of his SMMA stuff, just selling his courses, doing his masterminds. And now a lot of those people that were the most financially um, renowned are the investors that have come in and help purchase all these big brands. And so we're doing the same thing in the real estate sector, and just creating relationships and people that are advocating, going to bat with us, that we've helped from the ground up, and they love what we've done for them. And it's just a win-win situation. So a real cool process.
That's great. One of the things, of course, you teach is having a no debt real estate portfolio, and so I got to ask you about that strategy, with interest rates right now near zero these days. Where do you come down on debt in the year 2021? Using other people's money or really moving away from that debt philosophy?
And actually, I teach the difference between good debt and bad debt. And it's the relinquishing bad debt and leveraging good debt to be able to scale. And so there's a huge difference. And most people don't realize the difference between the two. And bad debt being going out buying a fancy automobile that depreciates in value sitting in your garage or every time you take it out. Going in and buying a big, massive home that it's your only home, you're not using it for business or any other use, and you're servicing a mortgage payment every single month. Bad debt being exotic vacations that you're utilizing capital that you can invest. And what I'm telling people is, look, let's create good debt that generates cash flow, and then you use that cash flow to go out and enjoy the better things in life, and they become tax write-offs. Everything's a business expense, subject to you doing business. When you're out facilitating a nice vacation, you purchase a vehicle, you utilize that vehicle in your day-to-day business. The home that you do business in, you're able to write off part of that, and especially now with COVID and everybody being home-based, it's a win-win situation. But if that asset does not create capital for you and it doesn't pay for itself, it's bad debt. But if it does pay for itself and it has cash flow coming in, it's good debt. It services its own debt. It pays for itself. And so I like teaching people the difference between good debt, bad debt, and how to create assets that grow in spite of your own efforts. Continue that residual income.
I love it. And there's too few people teaching that strategy. I tell people all the time, buying a big house that you're going to live in, that is taking money out of your pocket. People get mad at me. I'm telling you, it's not an asset. Things that take money out of your pocket every month is not an asset. It's not a performing asset. And to try to rewire people's brains, we were not taught this in school. This is not something we were taught. If we could alter our education system in this country, what advice would you give to, an incoming Department of Education secretary in Biden's, the Biden administration's cabinet, teaching financial literacy? What would that look like if you were invited to the White House to counsel on that in our nation's schools?
Yeah, well, I think they need a full course on capitalism that lasts more than one semester in school. And I think I think economics should be taught and explained, not more like a math class and that you're stressed out to take, but real economics, where you learn about stocks and you learn about taking companies public. You learn about EBITDAs and how profits escalate in businesses and how they're valued. You learn about how to set up corporations, LLCs, and the legal laws as to why you set up entities the way the self-employed and the savvy entrepreneurs do to take advantage of the tax benefits, reduce their liability, and helps grow their asset base. That type of stuff is the most important stuff that people should learn that they don't. And then what happens is there's a mindset issue that ends up coming to play because they've been shoveled how to go out and become a good employee their entire life. And so what I've actually learned, Clayton, is that 9 times out of 10, when people come in and start working with us, it's not the process of investing in real estate that's their biggest holdup. Their biggest holdup is their mindset of whether they can or can't do it. Most of the time, them thinking they can't do it because of all the years of teaching that they've had. So, what we just developed, and we went back, and it's a 12-week step-by-step process. And the first are all about mindset. We don't even have them up on our website yet. They're going to be up here in the next 2 weeks. But the first 2 weeks of the whole 12-week course is just about mindset and how to set up LLCs, and really walking them by the hand and teaching them, one, how they need to be thinking, and teaching them how to become an entrepreneur. And then we move into the real estate game on week number 3. Because if we can't even get them through the first 2 weeks, they'll never succeed in real estate because they can't get past that gap. And it's been the biggest dilemma that I found in the education space that no one's doing. They're just teaching them how to, but so many people are failing. There's like a 90% failure rate, and it's because there's that 2-week gap of education that we're trying to go in and fill that gap. And it may end up taking us more than 2 weeks. Like this is it's kind of a case study that we're doing to see, okay, will this really work in 2 weeks of courses, or are we going to have to expand on this, to really get people's mindset moving in the right direction before we start getting them involved in real estate?
That's a fascinating approach. I think most people just want to, swim before they can walk, and that foundation is so important. I mean, that foundation, it's like, when you're learning a new language for the first time, right? You have to understand how to conjugate the verbs. You can't go into reading a foreign language newspaper until you understand like the basic foundations of all of those things. I think that's a really revolutionary approach to this. I'll be interested to hear. I'd love to have you come back on after this case study and see how this has progressed over the next year or so. That's going to be fascinating to hear. Also, as you're sort of sitting down right now and you're looking at the real estate landscape, what is your approach to teaching people about real estate? Is it you encourage them to go one way or the other, whether it's commercial or residential, or do you give them the tools that they can go and buy a mobile home park themselves, or buy commercial, or start new construction? What is your approach to real estate and the sectors that you see real growth potential in?
So, of course, I advocate for certain sectors, especially right now with everything, the way the world's moving. But I'll give them the tools so they can go into residential. We want to see them succeed. And if they have to take baby steps, everybody's a little different. So if they feel more comfortable in residential, the tools we give them will help them succeed in residential. I always advocate for commercial real estate because it's been the most financially lucrative for me. It's significantly simpler in regards to dealing with tenants because of the triple net leases and even modified gross leases and the way commercial leases work. You have to take care of less problems in your assets than you do in residential. So I always advocate for commercial real estate. But right now, one of the big sectors is industrial warehouse space. E-commerce is growing. I always tell people you can have the perfect strategy. Clayton, I can teach people the perfect strategy on how to go invest in real estate. But if it's at the wrong time and they're moving into the wrong sector at the wrong time, they'll never succeed. And so I've been telling people, look, e-commerce is growing exponentially right now. I'm not an e-commerce person personally. I've partnered up with the right e-commerce people. I just am smart enough to say, okay, what does e-commerce need in the real estate sector that I can help with to be able to take advantage of the e-commerce growth? And that's industrial warehouse space. Distribution is growing. There's what I call the trickle effect, where you let the big Amazons and the Walmarts go out and build the big 1 million square foot warehouses. You go in and people starting to invest, go in and buy the smaller asset classes where they're going and buying 12,000 square foot, 15,000 square foot warehouse space. And through the trickle effect, all the small merchants that need manufacturing, mechanic shops, retail boats, boat sales, RV sales, all that stuff needs industrial warehouse space. Those areas that are growing because of what's happening with Amazon, Walmart, Wayfair, Pier 1 Imports, everything that we're doing with the online brands, it's going to help build that market sector and people can profit from it. Another thing that we're advocating for right now is we've been telling people, when there's times of distress, there's opportunity. Multifamily's been hot, Grant Cardone has made multifamily sexy, right? Everybody wants to be a multifamily. The problem is that the cap rates, I go to Phoenix and I'm looking at sub 4% cap rates right now.
Yeah, 2%, exactly.
And to go in and buy an asset It's $20 million for a sub 4% cap rate is just ludicrous to me. So I start thinking outside the box. Say, okay, how can I get something that's been made so sexy, but make it where it's financially viable? And so I take a look at the distressed hotel brands and I say, okay, these guys are getting hit so hard. They have a 2 to 3 year window before they get back to a financial status where they're even breaking even again in a lot of market sectors. And so you take those distressed assets, you go and reposition them into multifamily, and the cap rates are 2 times, 3 times over what you can get in multifamily. Take a little bit of win, yes, but the profitability, the financial security behind them is way more lucrative, and so the viability grows. And so that's another area in industry that we're advocating for right now as well.
That's fascinating. That's fascinating. I hear so many complaints in the multifamily space from my multifamily investor friends, that are like Ken McElroy and others who have just taken a pause on their normal approach because, 2% cap rates. And it's, unless you've got the Chinese investors who are trying to get money out of China, they don't care that they're making 1% return and they're buying that stuff up. That's a fascinating approach. I want to get you kind of led me there already, but I want to get your take on the landscape here. I'll get you out of here on this question, which is, where do you see things post-pandemic? I mean, it looks like it's going to get worse before it gets better. But we're seeing interest rates still incredibly low. We're seeing the Biden administration could be giving first-time homebuyer credit of $15,000. They only have to bring 3% down payment plus that $15,000 tax credit. So that could be a real boon for first-time homebuyers. Where do you see things moving post-pandemic and as we get out of, over the next few months and into 2021?
Yeah. Well, handouts, like I've been telling people, handouts can only last so long. And they continue printing money, but it's going to devalue our dollar bill. And with things changing so much, I keep telling people real estate is one of the only true assets that you can invest in, because if they give these $15,000 first home buyers incentives and they have all these moratoriums and they keep lowering interest rates, you go in, you buy these assets, the same asset that you're buying as the dollar bill depreciates it's going to cost more to purchase down the road. So even if we have hyperinflation, I think there's going to be a mass turnaround on the tail end of 2021 when the moratoriums are lifted, and even in spite of interest rates being low, there's going to be an influx of inventory that goes out on the market. And right now, there's a supply and demand issue. A lot of people are holding on to their real estate because they're working from home. But as this starts to unfold, America is going to continue being America, and as people start wanting to buy new homes, the moratoriums expire and they're forced to pay the forbearances that they have on their homes. We're going to have an increased amount of foreclosures, and that's the time that I'm recommending that people start buying homes, because again, there's financial distress. You can pick these homes up for a discounted price through foreclosures or short sales or whatever they become. You could still take advantage of some of the first-time homebuyers programs. And one of the big things is that first-home homebuyers right now, they haven't been able to go in and afford to get into homes in spite of the interest rates being so low because of the high appreciation of real estate. So this is going to give an opportunity for younger homebuyers, all the millennials that are now wanting to buy homes, moving into their late 20s, early 30s. I think there's going to be opportunity there. But for investors, the commercial sector is going to get hit with all of these companies being shut down. Restaurants, retail, merchants, all these guys have been shut down for 6 months, going into another year. There's going to be a point of diminishing return, and when all these vacancies open up, office, retail, all of this stuff to get distressed, including land, and it's just kind of snowball. But it takes about 2 years for all of this to unfold and unveil. That's what most people don't realize is it's a slow process of unveiling its true colors. We're just in the early infancy stages of this. So there's a lot of opportunity coming down to the market as far as buying in the real estate, both residential and commercial, over the course of the next couple of years.
Yeah, the real estate pains are always about a year to 2 year lag behind the rest of the pain. But people forget that. Yep. So that's great advice. I hope all of our listeners pay attention to that and heed those warnings, especially if you're looking for picking up distressed properties or even first-time homebuyer opportunities out there. Rent for now. Just wait. Well, Jerome, it's been great getting to know you, man. It's been great to have you here on the show. the best place, I guess, for people to go is to go over to your website, which we've got up here on the screen, which is jeromemaldonado.com. What can they expect when they come over to that website? What should they do?
Well, we have an abundance of different educational platforms that they can take advantage of. And then for those people that are interested in investing, just hit us up. If you guys want to just work on some of the acquisitions and properties and projects that we're taking down and we currently have going on, we'd be happy to talk with you guys. You can just hit us up with an email. And you guys can also DM us on Instagram. It's Jerome Maldonado and the number 1 behind it. And you'll see my picture pop up. And that's a great way for me and my team to get in touch with you. And we have a lot of stuff going on all the time, Clayton. We have our Wednesday free Q&A calls every Wednesday at 4 p.m. Pacific Standard Time, or 4:30 Pacific Standard Time. And then on Friday, we're doing Real Talk on Real Estate on YouTube live. And we just started those. So it's a little live TV program we do every Friday morning at 8 a.m. Pacific Standard Time. And so we ask all the listeners to join us. They're free educational stuff that we do every week. And it's my way of kind of giving back and helping people, luring people into the real estate industry, telling them, come on, let's go. This is a great time to invest and let us teach you how.
Awesome stuff. Well, we'll have links to all of that in our show notes. So if you're driving right now listening, don't worry. We'll have it linked up for you so you can go check it out. My guest has been Jerome Maldonado. Great getting to know you, my friend. Thank you so much for joining us here on the show.
Thank you so much. Really appreciate you having me, Clayton. Really appreciate your time and you introducing us to your audience.
You bet. And I'm sure they got a lot of value out of it as well. So Jerome, my thanks to you. And thanks to all of you for downloading and subscribing to the show. Thank you so much for pushing us up so high in the business category. I really appreciate that. And thanks for all of your kind feedback. Now go out there, take action, and become a real estate investor. I believe it's the number 1 way to build wealth, especially as they're continuing to print money and the value of that dollar continues to plummet. We'll see you next time, everyone. Take care.